Hello everybody. So this video was a Patreon request. I'm renewing my spreadsheet. These are the new numbers on my spreadsheet I share of Patreon, and I analyze the 7 stocks, the 7 Mag 7 stocks. And this is really a video that's important. I view it as important whether you either own individually any of these stocks, no financial advice of course, but also if you have any exposure to the indices, the NASDAQ or QQQ, especially the QQQ. These companies are so huge, they take such an important spot in the indices that I think understanding them is just essential to understand the entire market and what's going on. So I'll tell you my analysis of each stock in a second. To save you time, let me give you a quick summary right now. So I own Tesla, Google, Alphabet, right, and Amazon. Okay, I used to own NVIDIA. I sold NVIDIA for a nice profit, and that was an expensive lesson, both in terms of capital gains and but also opportunity cost, missed out gains. I think NVIDIA surprised many of us, and I'm pissed that I sold NVIDIA because I should have definitely kept it, and that's annoying. That's a lesson learned. NVIDIA, by the way, looks the best when I just look at the numbers alone. If you look at the numbers alone, in my view, it looks the best. It looks the cheapest. It's 0.41 again for a Mag 7 stocks for a top 5 company. It's really a top 2 company right now, top 3, top 2 company right now. It's very cheap compared to its spot in the indices. I could see it go much higher. So if you look at the numbers, NVIDIA I find still the cheapest, and I'll get to NVIDIA in a second in my detailed video. If I look at the opportunity only, I like Tesla the best, but of course this is not visible via the numbers. This is not visible by looking at the spreadsheet. You have to look at it qualitatively and start thinking about, 2 billion cars, they're all going electric. What if 500 million of those cars are going to be sold by Tesla? Well, they got 25 years of a business that's going to be like 10 times bigger than this. So will Tesla have $1 trillion in revenue alone, if you really think about that? Soon enough, I think they will. And I think that just outpaces just about everything. And lastly, I treat Google and I treat Amazon as savings accounts buckets. These are what I consider my savings accounts alternative. Although Google, I go back and forth because when I look at some of the stuff as Google, I find it very interesting. For example, their quantum computing initiative. For example, their SpaceX, they own 7% of SpaceX. When I look at YouTube, the value of YouTube, the value of Android, Google, I go back and forth whether it's a good growth investment or just a savings account stock. In my view, Amazon, it's a great savings account type stocks in a growth sector with a lot going for it. And lastly, when it comes to Apple, all I want to say is I cannot understand Apple. I simply don't get it. And let me begin by saying why I don't understand Apple. So I don't understand Apple because Apple is expensive. It's trading at 28 times EBITDA. It's trading at almost 10 times sales, and there's no growth. Growth's gone. They're predicted to grow revenue 5%. So, of course, there's some cyclicality in the sales of phones, but people have been owning their phones for much longer than that. Apple stock is up because the buybacks has been a huge story for them, and they keep doing buybacks at opportune time. They even have a debt, quite a bit of debt, and I noticed when I updated the spreadsheet, the debt has been growing for Apple, and that debt, you gotta, money is fungible, so if you take on debt and you do buyback, you could argue that some of that debt goes towards the buybacks. So that's the way it is. The market must really see something I don't see. In my view, 5% is like no growth. Maybe the market, there's a lot of hope maybe about the AI coming to the iPhone and the upgrade cycle with Apple Intelligence. Is that going to lead to a new upgrade cycle? I found one of their most innovative product, which was the Vision Pro, which I found so innovative. It seems like they were too early because it did not catch on. So I was surprised by that. So I have a hard time understanding why Apple is trading so high and so expensively, and why it's almost a $4 trillion company. I just have a hard time understand it. I also think there's a perpetual bid. There's a self-fulfilling prophecy, which is why is Apple so expensive? Because Apple is the number one. It's the number one stock in indices. It's the number one stock in the S&P 500 and in the Nasdaq. And so as a result of that, people who put money in the Nasdaq and in the S&P 500, they make the decision to make Apple their number one just because they are such a huge market cap. And so you have a virtuous cycle where it's kind of a self-fulfilling prophecy where Apple is the top stock in the Max 7 because it was the top stock last year and it keeps being the top stock. So it's a trophy stock, it's a trophy company. But many of these could be considered like that, could be considered trophy stocks and trophy company. And people who say don't understand Tesla, for example, they may be quick to say the same thing about Tesla. Tesla is a cult stock, is a trophy stock, kind of the same way for Apple. Now, I should note, I've never worked with any Apple product. I'm not in the Apple ecosystem, so maybe that's why I don't understand it as well as someone who loves Apple and everything Apple. And they have a truly very loyal customer base. So not for me. I just don't understand it, but that's okay. That's okay. That's it's my loss. And I know a lot of people were very successful buying Apple stock in the early 2010s. So let me move on to NVIDIA. Now, NVIDIA is a stock that I like to think I understand. NVIDIA, I used to be covering it. I bought it way before the major pop that surprised everybody. And, I want to own it again. I want to keep owning it. It looks objectively cheap in my spreadsheet. How much am I paying for that growth, right? Enterprise value over gross profit over revenue growth. How much am I paying for that growth? I'm paying a 0.41, which is very cheap. And that number is so cheap because it is based on that 93% forward next 12-month sales. Analysts are predicting sales to grow 93% for NVIDIA over the next 12 months, which is just insane. If they do that from this base, from a base of $113 billion, you would nearly double that. That's insane. Blackwell, by the way, should be huge for them. The stock has been flat-ish for the past 6 months because of the delays to Blackwell, but as soon as Blackwell gets rolled out, I think a lot of the market will be extremely excited to see the rollout and to see the orders. And so are we going to go through another cycle of I don't want to call it hype, but another cycle of growth, of discussion, of NVIDIA being the hottest stock in the market, a new cycle in 2025? I find that quite likely. Again, I psychologically, I can't buy it because I thought I was real smart taking a profit on it, and so psychologically, I still have that bias, but it would just pain me too much to pay much more than I sold it for. But it's a lesson learned, and it was an expensive lesson learned, which is why you may remember in the early days of the channels I was covering Palantir too. And I don't cover it anymore because there's many dedicated channels just talking about Palantir. So I like to have my own path and cover my own stocks. But I'm keeping my Palantir shares. Half of my Palantir position I still own, and I am keeping it even though all of the metrics, all of the numbers tell me it's so expensive, and it's so expensive. Well, I'm still keeping it, right? NVIDIA appeared so expensive, and then the growth surprised everybody. So NVIDIA was when I look at NVIDIA, I look at a teacher. NVIDIA taught me something, and I think it taught a lot of investors something. And the exponentiality of digital, of AI, is something to not be messed up with. And that's why I can tell you I'm not selling my Tesla anytime soon, if ever. So anyways, let me move on. Let me move on to Amazon. Amazon is cheap for a Max 7. If you hang out on Twitter, you see a lot of threads about how Amazon is super cheap right now, and now Amazon is great. There's not a lot of headwinds at Amazon, and my only criticism of Amazon is that 11% is not that exciting to me. Because I'm a growth snob, and because I want super explosive growth and high growth, and the stocks I cover on the channel all have much higher growth than 11%. And so that's the only reason why I consider Amazon a savings account stock. It's not that exciting to me because it's only growing at 11%. But otherwise, when I look at the numbers, I love it. I think Amazon is the leader at e-commerce. E-commerce is an hyper growth trend. It's a mega trend. and they're the absolute leader in the United States, of course, but they're doing quite well in Europe. And they're the best at cloud computing. They invented cloud computing. Amazon Web Services invented cloud computing. Entire companies. Look at a company like Zoom or a company like Netflix. These companies are entirely built on Amazon. They're entirely built on cloud computing. All of the SaaS sector is entirely built on cloud computing, and Amazon is the leader in that segment. So I really don't have lots of bads to say. I have no bad to say about Amazon, except that the growth is not that exciting to me, and I like to be in something that grows much faster. But of course, it's a more stable company, and so it all depends on your appetite for volatility. And you may know, if you follow my channel, that I have quite a bit of appetite for volatility, and I like typically smaller companies. And let's talk about Google. Google has been on my chopping block a few times, but I never really acted, because there's always things that give me pause and tell me, okay, Google is actually top in these few areas. Antitrust, by the way, because I know this is probably something in the comment section that will come up. Yeah, it annoys me, but these things, they take 7 years to roll out. I mean, there will be appeals, and the head of the FTC is likely going to change. So there's many things going on with the Department of Justice and all of that, and so antitrust. I doubt we're going to enter an era of successful antitrust in the coming years. I doubt it, especially with a new administration. So I'm not too worried. I'm not too worried about that. And if that were to happen, if Google were to be split up, don't forget that could be the best thing that could possibly happen to investors. If you look at Standard Oil, when Standard Oil got split up in 16 different companies, Rockefeller got richer than ever, and Standard Oil owners became richer than ever. So antitrust, you actually have a lot of people pushing for antitrust, saying, well, if we had antitrust, maybe YouTube would be a standalone company, and if YouTube was a standalone company, YouTube would be more valuable than a Netflix. Definitely would be more valuable than a Spotify, right? And YouTube Premium and Gmail, and I think they have something like 6 different apps at Google that have more than 1 billion users. So antitrust annoys me. I wish it wasn't there. I wish they stayed the same company, but these things take half a decade to a decade, so it's just an annoyance. I also don't like their AI rollout. I think that was a poor rollout on their end. Still with Gemini, I'm not that impressed, and I've been trying to incorporate AI in my workflow for the past 6 months. I'm not that impressed. My favorite AI is actually Llama 3. But I like Grok very much these days too. But Llama 3 has been one of my favorites. I add it as a friend as WhatsApp, and I have conversation on WhatsApp with Llama 3. And I know many of my viewers do that, of course. Worth noting that Google, they invented GPT. They invented ChatGPT. That was their product, but then OpenAI kind of took it on and and stole their thunder. And this reminds me of, say, Kodak. Kodak invented the digital camera, and they let it sit on a drawer. And of course, Kodak is just history. This is the classic innovator's dilemma, and many divisions at Google suffer from that innovator's dilemma. This is why they did not release GPT, because they didn't want to jeopardize ads. But Google is a business that is much bigger than ads, in my view. They have, first of all, a 7% stake in SpaceX, and I could make a case that what's the present value of that 7% stake in SpaceX? What's the present value of that in the future alone? We saw the valuation of SpaceX just spike and spike and spike in the private market. If SpaceX was a public company, would it be $1 trillion company? Maybe. Starlink is taking over, right? I believe Starlink is going to be a major threat to the AT&Ts, to the telecoms, to the cell phone market. I think it's going to be a major threat to internet. And of course, they own that. And so 7% of SpaceX. Google has always been my exposure to SpaceX. They also have fascinating divisions like AlphaFold. Some of their engineers at AlphaFold got Nobel Prizes for their work there. They objectively, I think, have the best quantum computing division. You have Android. So Android is that's the over 75%, 25% Apple and iOS, and the rest is Android. And so, of course, even though Android has a stock version that is open source, Google still largely controls Android, and that's a major business. YouTube, like I said, and Waymo, and I mean, so GM Cruise stopped. If there's any competitor to Tesla, who could it possibly be? If there was ever one competitor to Tesla, the only company that is still in the race, in my view, is Waymo. And so what would be the valuation of Waymo in the market if it was a standalone company? Right. Well, I think it would probably be much higher than, say, a Mobile Eye, for example. And so just Google. When I do some of the parts and I look at all the parts of Google, I think it's a fairly inexpensive company. And I go back and forth as to whether I deem it a savings account stock or a growth stock. But to me, this company is one I don't mind owning, and I find it quite interesting. It's not the cheapest, but it's not the most expensive in the spreadsheet either. Let me move on to Meta. So Meta is a company. Again, I love Llama 3. And I love WhatsApp. WhatsApp has replaced texting for me. I mean, a good way to think of WhatsApp for many people, many countries around the world is that's the disruptor of text. They simply disrupted texting. That's the way I look at it. And Llama 3, I think they've had outstanding execution for all of that. The problem with Meta is that their main business, and what I think it might as well be called, is the Instagram company, and I don't use the gram, as the youth calls it. I don't use the gram. And I think TikTok is probably a formidable competition. And the videos go back and forth between TikTok and Instagram. But it seems like they've done really well at tweaking their algo on Instagram and making Instagram as addictive as TikTok. And if you're a user of either, please let me know what you think about that. But it seems to me like the short form video, short form content, addictive content. Again, my social media is YouTube and X, and so as a result of that, as an investor in individual stocks, I don't think like I have an edge. I don't feel like I have an edge in analyzing a Meta. And since the valuation is a little high, and since the growth is a little low, I mean 17% forward growth for any investor would be considered good, but I'm a growth snob, so for me it's a little low. Well, I don't see a reason to try to understand it at this point. So again, it's tough to judge. It's tough to judge for me. I think it could be a tailwind if TikTok is banned in the USA. But that narrative has shifted, and I don't hear that narrative from the new administration, so I don't know if TikTok will be banned. Maybe. I don't know. It was not as central in the 2024 election as it was in the 2020 election. And I don't think the Europeans are going to ban TikTok either. So, yeah, tough competition. They've been great competitors, though. They've done well at the competition. It seems like Instagram-like companies. You have Instagram, you have TikTok, and they're both apps that I don't use, so I can't judge it. Love their AI at Meta. I think they've done a great job with AI. So released it so quickly, gone open source. I think they've done a great job at that one. The metaverse, we'll see. They're probably too early with the metaverse. If you look at a company like Apple and a company like Meta, they both have likely a future in the metaverse, but it seems like they're too early. And we are in the valley of despair of that space. Look at drones. Drones were a big thing in the early 2010s, and then we had a 10-year valley of despair, and now drones are big again. 3D printers are slowly making a comeback. And they were a huge thing about 10 years ago. There's a valley of despair going for augmented reality. When they come out on the other side of the mountain, they might have some market share in there. But for now, that's not a big opportunity. Let me move on to Microsoft. What can I say about Microsoft? Well, first of all, ChatGPT and how quickly they moved with ChatGPT was impressive. Their 50% stake in it, their investment, the speed at which they've been able to throw money at ChatGPT was absolutely impressive. Don't forget, ChatGPT has more than 300 million users now. It likely is the next big $1 billion app is likely a ChatGPT. So they've done really well on that, even though I still don't know if ChatGPT is going to be the winner. I like Grok a lot. I like Llama 3 a lot. There's a lot of options. I'm not a big fan of Gemini, but there's a lot of options out there, and I don't know if ChatGPT is going to be the leader or not. So it's a risk to take. By the way, and ChatGPT, don't forget, ChatGPT, the next version of ChatGPT, I'm thinking about this now because I'm in Europe right now, was not allowed in Europe or the UK. So if you have a next version that's not available in Europe or the UK, you're missing out a huge market. Perhaps near about 500 million people. You're missing out on a huge market. So and I don't know how Llama 3 and Meta and Google are going to handle it if they're going to be banned in the EU and the UK for the next gens. I don't know, but that's also a question that's out there. To me, there's a lot of it's outstanding what they've done, but to me, most of the money in AI right now, concretely, the money in AI right now is being made by NVIDIA, made by hardware. It's hardware who makes the money first in that field. Right now, I find it blurry to figure out which company is going to make much of the money in software. We'll know which company makes much of the money in software, in AI software, maybe 5 years from now. And I can't know if it's going to be Microsoft or if it's going to be Meta or if it's going to be Google. Hence, the index funds methodology. Like the index fund methodology is stunning from that one. I guess if I were to make an index fund for me, if I could find a way to remove Apple and remove Meta, I guess I would leave. I don't even know. I don't even know. Like I said, for me right now, as I said in the beginning of this video, my one no-brainer for me in there is Tesla from a qualitative standpoint. It's NVIDIA from a numbers-only standpoint. I don't see a stock that has both the numbers and the quality. So I always put qualitative analysis ahead of a simple spreadsheet analysis. And if you know my channel, in my spreadsheet, my undervalued spreadsheet where I have all of the stocks, I have some stocks that fit both the numbers and the quality. HIMS, for example. HIMS, they have both for me. They are highly quality management, great strategy, great company when I analyze it. Love everything about their strategy and what they're attacking and their sector and what they're going after. And they also have the good numbers to go for it. I don't see a stock that has both in there, both an undeniable easy spreadsheet and the growth numbers to back it up right now. That's why Tesla for me is the one, but Tesla is only quality. It's only qualitative analysis. It's only looking at it at face value and making simple analysis and looking at, okay, we got electric cars are the future. Sometimes an analysis as simple as that is sufficient, in my view, at least in the case of Tesla. And Tesla has served me really well. I need to recover it right now. I can't believe the performance that this stock is going through and having right now. Anyways, back to Microsoft. Sorry, I ramble. Microsoft, what's good for them though? They have Azure. Right? Azure is the third member of the Amazon Web Services, Google Cloud product, which everybody calls GCP, and Azure. That's an oligopoly. It's the big threes. All of these threes are the big cloud providers, and they have an oligopolistic situation in there where they pretty much share the market. And I think from Azure, Microsoft will benefit from the rollout of AI. But so will GCP and so will AWS. They are hyperscalers, as we call them. They are Max 7 companies, so they will have a great benefit from that. They're the companies of the 21st century. They're the 21st century companies who are benefiting from our industrial revolution, which is the industrial revolution of digital versus analog. 20th century was analog. 21st century is digital. They benefit from that. They're also the largest seat-based SaaS company in the world with 100 million enterprises using them, and how many from companies with 10 people to companies with millions of people. Microsoft is what they use. And they have, of course, billions of households with Microsoft set up. And so that creates a network effect moat that is second to none. And I think we could see some headwinds, by the way, from people switching to non-Microsoft solutions. We've seen this, for example, with Linux in the server market. But I think that could take decades to materialize. And for example, the example I have here is Google Sheets versus Excel. But I could have said Microsoft Teams versus Slack. Although the fact that Slack is owned by Salesforce is making that argument not as good, because Salesforce has its own issues. But if you compare, say, a Google Sheets versus Excel, I think Google Sheets is a much superior product. At least that's what I think. And so I'm like, how many people are seeing that? Outlook versus Gmail. Gmail, you don't have a Gmail account to use Gmail. You can set up whatever website in your own email. So could some people switch from Microsoft to non-Microsoft solution? What is the power of that network? What is the power of that habit? The power of the brand? Well, I think in the case of Microsoft, it's still really, really strong. But over the long run, they need to make sure that their products are still minimally good, minimally viable, so that people don't spend the energy to try to figure out something else and switch. And so that's why I think the switching away from Microsoft, I think that would take decades to materialize. And this company, in my view, has still a bright future ahead of it. It's just so slow. Growth is just too slow. The growth is just too slow for me, for a company like Microsoft. But anyways, moving on and finishing up with Tesla. And again, I'll be quick, because Tesla, the big question is, how long do I have to talk about Tesla? I've made 2 large videos on this channel about Tesla. I think the shorter one of the 2 was an hour and a half. Like an hour and a half talking about Tesla. So, of course, and of course, I'm the tiniest. My 1 hour and a half monologue. Well, that's nothing compared to what you can find from, some of the top YouTubers who only cover Tesla. They could talk about Tesla for months. So the point is, to me, it's always how simple can I emphasize this opportunity. No financial advice, but how simple can I make it? Well, there's 2 billion cars in the world. I mean, it's an estimate. We don't know. Is it 1.8 billion, 2 billion? Roughly 2 billion cars in the world. You have to think that they will all switch to electric. I mean, if you don't think electric is the future, you wouldn't even analyze Tesla. But let's assume that you're a first principle thinker, or let's electricity. Why electric, right? Because it's 10 times cheaper to power. They go much faster. They last much longer. Yes, there's a lot of FUD out there for battery and stuff. And so it's not a matter of listening to what you've heard, right? It's a matter of researching it for yourself and having your own opinion. And of course, the legacy auto industry is so strong. They have everything. They have the loyal car buyers, and you have people going around who all they do is disparage electric cars for this or that. But once you're first principle thinker, once you figured out that Teslas are quote unquote laptop on wheels, or cell phones on wheels, and that electricity is the way to go and is the future, if you agree to that premise, which is electric cars are the future, then it's a very simple thesis. There's 2 billion cars in the world, and there is one leading maker of electric cars. It's Tesla. And so if Tesla were to achieve the same market share as Apple, roughly, let's say 25% market share, that would mean that 2 billion times 25%, well, that's 500 million cars. There's 500 million cars that need to be made over how long? The next 20 years, the next 25 years? Well, if you do 500 divided by 25, well, that's roughly your 20 million cars a year. And 20 million cars a year, we knew that was a long time target for Tesla. They will likely do way fewer cars right now, because we still have this issue with the interest rate, and we still have people who are holding off buying a new car because their interest rates are high. But a lot of people buy a car not because of interest rates. They buy a car because their old car broke. Right, because your car broke. So that right there is a nutshell of the difference between Keynesian economics and Austrian economics. Austrian people believe that you're gonna buy a new car because your old car broke and you need to bring the kids to school next week, and your car broke. So you need to go replace the car. That's how the Austrian thinkers think. Keynesian economics will tell you, well, people are going to hold off on buying a car because the interest rates are so high, so they're not going to buy a car, but they will buy a car because the interest rates are low. So this is kind of a tension. And of course, the truth is probably somewhere in between. It's probably somewhere in the middle. There's a little bit to say about interest rates, but there's also a lot of to say. But you can't really delay buying a car forever. And eventually these gas cars, they're not as reliable. Eventually they will fail. And when they fail, I think, and I put my money where my mouth is, but this is close to 30% of a portfolio for me, Tesla. When they fail, I think most people under 40 years old will make the choice of buying an electric car as their next car. So 2 billion times 25%, there's 500 million cars to be manufactured. And of course, Tesla makes money on these cars. 14% EBITDA margin, 18% gross margin. And those margins, in my view, they will only grow in one direction, i.e. they will make more money moving forward on making these cars. You get better at making cars. They get better at making cars year after year. Look at Giga Texas, much better factory than Fremont. They use AI in the manufacturing process. What will happen when they introduce more robots in the manufacturing process? If they're developing Optimus. Why are they developing Optimus, right? Well, they're developing Optimus, of course, because it may be a huge product at some point, but also to use in their own manufacturing. Processes, just like Amazon Web Services got started for Amazon. Amazon built Amazon Web Services because it wanted to handle holiday shopping and people buying on Black Friday or Cyber Monday online. The website would crash in 06, 07 because they didn't have the IT to handle peaks. And so they built it for themselves and then they sold it and it became they sold it to other companies and it became a bigger part of their business. That's the story of AWS. Optimus, Tesla is working on its own. It's working on its own. It's for itself, and then they will also sell it. And that doesn't even scratch the tip of the iceberg, which is FSD. They're gonna license FSD. If they license FSD, they may have 25% of the auto market. I'm talking down the line, but they could have 75% of a software market. Think about Apple, right? Apple created iOS only for Apple products, and it pushed its own hardware. I'm not sure Tesla is going to take that route, and we know Tesla is not going to take that route because Elon is like, I don't have a problem licensing the tech and having you pay for the tech. So you could have a hybrid. Tesla could be a hybrid between a Microsoft and an Apple. Kind of a more hybrid company. And this is the way of the world. This is the way of 0 to 1. If you read the book 0 to 1, Peter Thiel, right, PayPal Mafia, Musk's friend who wrote that book, the way of the world is the monopoly. And they want to achieve a monopoly. And so if licensing helps you get bigger, they will license. And FSD could be bigger, of course. Robotaxis, I didn't even mention that. That could be bigger. But you have energy. Energy could be bigger than cars. Robotaxi could be bigger than car. FSD could be bigger than car. And of course, if you were to put Optimus in any outside Tesla model, if you were to assume just that Optimus is going to be sold to, say, another company to begin with, then all of the models break and you can get into very silly revenue numbers where you start computing and you're like, okay, well, I don't understand. I'm computing this and I think they could make 10 trillion in sales or something. And that's how you get to very, very silly numbers that make absolutely no sense. If you don't believe in AI, if you don't believe in electric cars, you would never touch Tesla, obviously. But if you do, then this opportunity is hard to understand. And I'll conclude with this, a little burn for me as a Bitcoiner and a lover of Bitcoin. And unlike Microsoft, Tesla adopted Bitcoin for their balance sheet about 3 years ago. Sure, they stopped. Sure, they're not adding to the bag. But I think they might. We'll see. We don't know what's going on in 2025. They might add it back again. At the end of the day, it's the only Mac 7 who has Bitcoin on the balance sheet. It is Tesla. And so I am quite impressed by this one. So anyways, let me finish by saying that this was not financial advice. This is not investment advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you so much for watching and have a wonderful, wonderful day.